what is your take on fixed deposits in a background scenario where high interest rates don't seem to be sustainable any longer? So you have the era of a high interest rate seems to be fading out. So in such a scenario, how do you view FDs as an investment for a youngster who has a 40-year or a 30-year long career for investing? What's your take on that?
So I'll go and take a step even back. And my sense is the way we approach finance, we need to rethink about that and recalibrate it as per our growing economy. So most of the research in finance, we take finance in America as given. And then we do translation of that research for an emerging country like India. And we say, okay, this works there, so it will work out here. What we don't get is, if you go back, like 30 years back, 1993, India is a $250 billion economy. Today, you're a $4 trillion economy in a span of 30 years. I think there are only 6 countries in this world which have done this journey, where in a 30-year span, they have gone from $250 billion to a $4 trillion economy. And what is more amazing is that there are very few countries, and I think except for US and China, there is no other country which will see the transition of India from a $3 trillion to a $30 trillion economy in the next 40-50 years. So instruments, things that were applicable 30 years back in 1993 are not going to be the same instrument that is applicable today. Whether it is real estate, gold, fixed deposit, or any other asset class for that matter. You need to keep on evolving. Every 10 years, you have to go to the market, take stock of what all instruments are there, which is available, and then rethink, rebalance, re-strategize to live for another decade. So it's not just about fixed deposit, even real estate. In 1993, you buy a house, it would have given you a tremendous amount of capital if you have invested there for 30 years. Will I gain the same if I invest today? Or will I gain the same when I invest in 2050 in real estate? I mean, these are 3 very different questions. 1993 India is very different. Very poor, but very fast growing, tremendous potential, but politically unstable. Today, you have got political stability, rule of law, very well functioning market, a lot of pipelines got getting fixed. You have potential to grow in finance. In 30 years' time, it may or may not materialize, and then maybe you need to rethink about it. So my take is, coming back to the instrument like fixed deposit, 30 years back, it was giving you an interest of 12%. Banks were the only one which, in the name of finance, we had only financial institution in the name of banks. There was nothing else. Couple of NBFCs were there, but they were very risky. Brokerage firms were marred with a lot of issues of corporate governance. A lot of this is cleaned up.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.